Happy Friday, everyone. Good morning. Buenos dias. Guten Tag. Bonjour. Bon après-midi. How's everyone? It is Friday the May the 5th on 2017, Cinco de Mayo today. Happy Cinco de Mayo to you. 8:02 a.m. Chicago time, 9:02 Eastern U.S. time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market condition right now is the flow is into risk assets. Again, the Euro stocks leading, but not by much. 19 points, up 0.56%, followed by the Russell, the Nasdaq, and the S&P. The non-farm payrolls came in strong today. We'll go over those numbers. Crude oil just falling flat on its face. It actually had a big drop, almost like a flash crash, and has recovered somewhat. And then the laggard is crude. Crude's down 5 cents. Crude was down as far as down to $43.76, almost $2 from where it is right now. Um, the Treasury notes are flat, unchanged, amazingly. Um, and the U.S. Treasury bond is up 5 ticks. So that's where we are. That's where we are right now. As far as the numbers themselves, the unemployment rate dropped to 4.4% versus 4.6 expected, lowest since May of 2007. The change in non-farm payrolls came out at 211,000 versus 190,000 expected. The average hourly earnings came in at zero point 0.3 in line, 2.5% versus 2.7 year on year, and average weekly hours 34.4 in line. For those with statistic I read, for those with a only a high school diploma, the unemployment rate dropped from like 15.6 to around 6.5%. So there are hand skilled jobs being uh, being in demand right now. Um, what is ahead of us today? Sorry, I'm struggling with my throat here. Um, what is my? I'm keep having to take a break to take a sip. Um, What is left ahead of us today? Nothing on the calendar except consumer credit. Consumer credit is expected to be out at 3 o'clock Eastern for March, expecting 14.0. Speakers, we're looking for Fed Fisher 11:30 Eastern. We're looking for Fed Speaker Williams at 12:45. We're looking for Fed Speaker Rosengren at 1:30 and Fed Chair Yellen at 1:30 as well. So uh, there's a parade of Fed speakers again. 11:30 we get Fisher, 12:45 we get Williams, 1:30 we get Rosengren, and 1:30 we also get Fed Chair Yellen. Today, all times are Eastern U.S. time. That's what's left for today. The other news components, again, oil taking a big hit. It tumbled about 3.6% to 43.76 and recovered. It is currently trading at 45.45 or 45.41. And for those of you who didn't know, didn't hear, the Republican led Congress, House of Representatives, has introduced a bill for a change to the healthcare law, and, and the bill passed by, I believe, 2 votes. It goes to the Senate. It's expected to be dead in the Senate, but we'll see what happens there. Um, the bill is not favorable to those with pre-existing conditions and those who have a difficult time affording health care. So we'll see what happens there. We'll see what happens in the healthcare sector of the S&P. The S&P health sector is makes up about a fair amount. I think it's around 19% the last time I looked. So We'll see how that works out. Let's take a look at what we expected yesterday. Hypos yesterday completely off. Putin voted twice. That's funny. Um, the hypos yesterday completely off. We started out looking pretty good for hypo one. I expected a push up yesterday. Did not really look for a drop. Um, and so when we started the morning session, I was looking for an open auction, a drop to the point of control, which is in the 82, 23, 82 area, and I was looking for a bounce back up to the overnight high. On hypo 2, I was looking for a push early that gets met with sellers initially as we push into 23.95. And then once we would get our sellers, we would find a base and then start to push towards 23.95, 98, and potentially 2400. Neither one of those happened very cleanly. Here's what happened yesterday. We did get this selling down to the point of control. There it is. Expected a push to 23.82 and a rotation up. That's hypo one. So up to this point, I'm looking at hypo one, looking at hypo one, looking at hypo one, and then boom, we have this sell-off, 10 points down, impulse down, and immediately met with buying. So there's no continuation, and we have seen this pattern. We have seen this pattern happen again and again over the last couple of weeks. So we had an open auction, what looked like an open auction, but it really was more of an open rejection reverse to the downside. Pretty good rotation to the downside. The market ended up finishing with a P-shaped profile, a clear rejection of the lower prices. But if I zoom out into a 15-minute, again, I keep having to clear my throat. 1 second. Again, if we look at the 15-minute, we see the same pattern kind of happening again and again. Market drops, buyers step in strong, market drops, and then this stayed sluggish. But it's consistent that when we push into the lower end of this composite, we get this strong buying. Drop, push, and then yesterday, drop, push. There are buyers lurking. We still have our gap zone beneath us. We've tested the gap mid at 23.75. 75, we went to 23.75. 50, and we went yesterday to 23.76. We were a tick higher. And so what this is doing is it's forming this kind of head and shoulders and then stalling. And then again, it forms a head and shoulders and then stalls. This is what we get here. We have the left shoulder, right shoulder, consistently sitting right at the point of control. Here it is, left shoulder, right shoulder, and then it just ends up being the point of control. Very, very odd behavior, very low volatility um, and very low range for the S&P relative to what we would consider to be normal for May. So as we shift this profile forward, we see that we just keep stacking more and more and more volume right on top of the point of control, which is currently at 2383.50. Yes, this is an inverse head and shoulder. I'm not sure if I said that. Um, and so it's there really isn't much to talk about on a daily basis. We did have a very strong, a fairly strong unemployment report. Here's what the unemployment report looked like. We had a 5-point move on unemployment. I remember the days when an unemployment report that was strong by 20,000 would lead to about a 15, 20-point move. And we saw with the FOMC the other day, we got about 2.5 points. The market's just not, the participants are just not committing to anything right now. I know buyers are committing to buying when there's a dip. This move here overnight was in line with crude. Here's the chart for crude in case you don't have one. Look at this baby go. Just an absolute stop run here. This was the delta. The delta we see here is clear indication of a big stop run. Someone with a large long position or multiple participants with large long participants positions had their stops in this area below 45, and it looked like it just ran through. And then immediately it came right back to the scene of the crime, and it's consolidating and it's holding steady against yesterday's close. So crude looks like it's unchanged, but it dropped to 43.76 overnight, and this move is in line with what happened in the S&P overnight as well. That's in line with this. Of course, not as excessive, but the S&P has moved in sympathy with crude uh, on this particular move. Okay, so we're pushing up against highs. It looks like we've rejected the low. This is not a very strong low, but we're above the point of control. We're above the mid. We're above VWAP. We're above the overnight open. It looks fairly bullish, and we are basically trading above yesterday's range. So we're going to open up in a small gap of about 3 points or so, and then we're likely to just sit sideways. Why? Because in general, we have not done anything this week. The market seems to be on a holding pattern, waiting for something to happen. And we have the French election on Friday, on Sunday. The French election results are important because both candidates, one an extreme populist, took over a party from her dad. Her dad was really a very very strong populist, someone who was fairly disliked by many, and has ambitions to just immediately leave the eurozone. She feels like she believes that the euro uh, area is hampering France's growth and control over its sovereignty. Uh, that's Le Pen. And then Macron is a moderate. He doesn't belong to any particular party, and that's the opponent, and is favored going into this election. However, the polls have been way off in the U.S. election. They were way off on Brexit. So I don't know that the polls will tell us what we know, and that means there's a significant risk that's being presented to the market because Macron also is saying that they want heavy concessions. They want heavy concessions from the eurozone um, for France to stay in the eurozone. So what this election is about is not who's going to lead France. It's really about what is the sentiment towards the euro, and this presents a threat to the existence of the eurozone, and that is why the market is being attentive. And we had that gap the other day. We're likely to have a gap. I believe the French election results come out at 8 or 8:30 p.m. European time, which is about 2 p.m. New York time. The futures markets, the currencies will be trading, but the futures markets don't open until 6 p.m. New York time. And so there will likely be a gap reaction. So it's really important if you're trading futures. It's really important for you to make sure that you have initial margin in your account per contract traded. So for the ES, you really need to make sure that by the end of the session today at 5 p.m. that you have at least $5,500 per contract if you're planning to hold into this election. Otherwise, you risk getting your position liquidated by most FCMs. They're not going to take the risk for you with a gap market, and you will get liquidated and charged for that, for the liquidation. So it is smart to close things up today if your account is not large enough to at least hold the initial margin per contract. Okay, be smart. Don't force someone else to close your position for you. And that's where we stand. So as far as what we're expecting for today, and by the way, it is like Friday. I would appreciate it if you, before you leave, you hit the like button on YouTube for this video. That helps me out. This morning, I'm expecting a quiet open auction. We have a nice ledge here, a nice tabletop that we are up against. Remember, we're coming from a gap and we are gapping up just slightly. The expectation is for the market to have an open auction, to dip, and then I'm looking for this to finally tackle this 95, look for a push through 95 to about 96, consolidate, and then go sideways into the closing range. So I'm looking for, and the main idea behind Hypo 1 today is for buyers to come in. Okay. Now, if buyers cannot sustain these prices and sellers are motivated to keep this inside of balance here to defend this high, then we would get the open auction test of the overnight high and then a reversion to close the gap. We have basically a triple top here from yesterday. Close the gap, look for initial support at the triple top, and then a push down into the 2383.50, and then a finish just inside of yesterday's range. This is hypo 2. Okay, hypo 3 is for the market to push up, fail completely, and cross this range back down into 2383.50 and all the way down into this low of 2375. I won't draw that. Hypo 4 and 5 are probably go take a nap, but we'll see how this plays out. Now remember, positions are going to be squared up coming into the close today, so the close may see some sustained movement, a directional movement into hedging for this weekend's election. Be smart, step out of the way. Again, I would appreciate if you'd hit the like button as you head out this morning. Good luck, and I'll catch you on Monday morning. Take care.